Yeah, yeah, we'll roll all votes. The Committee on Oversight and Government Reform to come to order. Before I begin, I want to thank everyone on both sides of the dais for the hard work that was done leading to what I believe, at least during my tenure on the committee, is the greatest number of substantive bills that we've ever put through. I'm proud to say we're not naming any post offices. I think many are happy to say we're not yet marking up postal reform. But in fact, these are bills that, although I think today is going to go smoothly, they're not by definition easy bills. They're bills that both sides have been working on long and hard. The public has had a lot of input. And lastly, I think the committee's work demonstrates that, one, we can get a long way toward getting something to the floor here if we work together. Secondly, I believe that what we're discussing today is doing the best we can on these bills, but keeping the record open to make sure if there are other good ideas on some of these major reforms, that in fact we'll include them in the floor. So that may be said multiple times today by the ranking member and myself, that we will continue to work, and there's a possibility of a manager's amendment. But I do want to thank everyone for the fact that these bills, at least as far as we know, are current, complete, and represent the best work that we can do both with the public and with ourselves here on the dais. And with that, I'd recognize the ranking member.
Thank you very much, Mr. Chairman. I want to thank you for, and your staff, and certainly my staff, for all that has been done to bring us to this moment. Transparency is so very, very important, and as we address the issue of transparency, it's the bills that we have here today, many of them go to that very, very important issue. I've often said, and I tell my staff probably they hear it more than I'm sure they like, is that in the moments that we have to do our work, it is limited, and we must be effective and efficient. Life is short, and that the American people are depending upon us to give them the very best that we can give them. And they want us to help uplift their lives, to make them better every day. And so I'm very pleased about what we're doing today. I've looked over all the bills. I think you're absolutely right, Mr. Chairman. We have a just tremendous amount of cooperation. There have been instances where both sides have had amendments to make the bills better. Some of those amendments have already been incorporated before we even got to this moment. Others will perhaps be put forth today. And so, again, I want to thank you, and I look forward to the markup.
Thank you. At this point, I'll name the bills to be considered today. H.R. 249, the Federal Employee Tax Accountability Act of 2013. H.R. 882, the Contracting and Tax Accountability Act of 2013. H.R. 313, the Government Spending Accountability Act of 2013. H.R. 328, the Excess Federal Building and Property Disposal Act of 2013. H.R. 1163, the Federal Information Security Amendments Act of 2013. H.R. 1232, the Federal Information Technology Acquisition and Reform Act, my personal favorite. H.R. 1211, the FOIA Oversight and Implementation Act of 2013. H.R. 1162, the Government Accountability Office Improvement Act. H.R. 1133, the Presidential Library Donation Reform Act. H.R. 1104, the Federal Advisory Committee Reform Act. H.R. 1246, the D.C. CFO Vacancy Act, and I want to thank Ms. Norton for getting that added in timely fashion. H.R. 1233, Presidential and Federal Records Act Amendment of 2013, and a companion, H.R. 1234, the Electronic Message Preservation Act. As is our practice, we're going to roll any recorded votes that come up so that individuals can be assured of a time certain should there be a recorded vote. If there are no recorded votes and any final passage that would go by voice would be done in order. So if someone wants to recorded vote on a final passage, they need to make sure somebody is present to ask for it. Our hope is that many of these will go by voice vote. The committee will now consider H.R. 249, the Federal Employee Tax Accountability Act of 2013. The clerk will designate the bill.
H.R. 249, a bill to amend Title V United States Code to provide that persons having seriously delinquent tax debts shall be ineligible for Federal employment.
Without objection, H.R. 249 will be considered as read and open for amendment at any point. The text has already been distributed and is in each of your folders. I'll now recognize myself for a short opening statement. I commend, first of all, Congressman Jason Chaffetz for reintroducing this legislation which does nothing to change the terms and condition of employment of Federal employees who are making a good faith effort to pay their fair taxes. All Federal employees are held accountable for paying their taxes by the Code of Ethics for the Executive Branch. The Code of Ethics designates the Federal employee must satisfy in good faith their obligations as citizens, including all just financial obligation, especially those to the Federal, State, and local taxes imposed by law. According to the IRS, more than 100,000 Federal civilian employees owed more than $1 billion in unpaid Federal income taxes in 2011. The intent of the bill is simple. It's, in fact, if there are Federal employees or job applicants, you should pay your taxes or dispute them, or, quite frankly, work out a system of payment. All taxpayers have a right to do that. Employees who conscientiously ignore channels and processes to place and fulfill their tax obligations must be held accountable. I want to note just two things before recognizing the ranking member. First of all, the $1 billion figure, I want to make it clear, includes people who are working out pay plans, includes people who have had a number of financial reversals. The intent of this bill is to find the few bad actors, and in fact, I believe that one of the benefits is those who have made arrangements and settled and are not living under the cloud of an IRS unpaid and unanswered claim tend to be better employees, while those who are trying to figure out how to juggle things and not coming to terms with unpaid taxes probably, in fact, have a harder time focusing on the work of the American people. With that, I recognize the ranking member.
Thank you very much, Mr. Chairman. H.R. 249 is a revival of Congressman Chaffetz's bill from the last Congress. This bill would require the Federal Government to fire Federal employees who fail to pay their taxes. I opposed that bill when it was brought before this committee and to the House floor last Congress, and I remain opposed to this bill now. While I strongly agree that everyone, including Federal employees, should pay their taxes, I have a number of concerns about this bill. First, the compliance rate for Federal workers is much higher than that of the general public. According to IRS, the overwhelming majority, 97% of Federal workers pay their taxes in a timely manner, compared to only 92% of the general public. As a result, this measure is largely symbolic, as Chairman Issa conceded when the committee considered this measure last Congress. Second, there are remedies in place to address cases of noncompliance by Federal workers and, indeed, all Americans. Under current law and regulations, agencies can take disciplinary action against employees for failing to meet their tax obligations, ranging from counseling to outright removal. I don't see how the exemplary compliance rate among Federal employees justifies the adoption of a new law that would apply only to Federal employees. Mr. Chairman, the legislation simply seeks to demonize Federal employees rather than ensure their compliance with tax obligations. By requiring agencies to fire employees for not paying their taxes on time, the measure actually undermines the ability of the government to collect the unpaid taxes. It is much, much, much more difficult to recoup delinquent taxes from someone who is unemployed. In fact, enactment of this legislation would increase costs to the taxpayers by requiring agencies to spend time and resources to review public records to find tax liens filed against current or prospective employees. For this reason and for these reasons, I oppose H.R. 249. I urge my colleagues to join me in voting against the bill. I yield back.
I thank the gentleman. I'll hold the record open to the end of the day for members who wish to submit written statements. Does any member wish to speak on the bill? The gentleman from Utah.
Thank you, Mr. Chairman. I appreciate your calling up this bill. I think this is a good common sense approach. Look, the overwhelming majority of employees who work for the Federal Government, they do the right thing. They pay their taxes. They're patriotic. They care about their country. They care about what they do and how they do it, and they're doing the right thing. Unfortunately, we have a few that don't. But that number has now totaled $1 billion annually in uncollected taxes. We have some 688 people between the House and Senate who are working here today who aren't paying their Federal taxes. It accounts for about $10 million in uncollected taxes. We have 40 employees in the Executive Office of the President of the United States who don't pay approximately $300,000. And interestingly enough, years ago, the IRS was having this. They were terribly embarrassed because they had a low compliance rate. They changed their internal rules, and now they have the single best compliance rate in the Federal Government. We had to learn from that example. They did it at the IRS. This bill simply allows other departments and agencies to have the same process in place that they've had at the IRS. Employees who consciously ignore the channels and processes in place to fulfill their tax obligations must be held accountable, and the Federal Employee Tax Accountability Act addresses noncompliance with their tax laws by prohibiting individuals with serious delinquent tax debt from Federal civilian employment. Most taxpayers file accurate tax returns and pay their taxes on time, regardless of their income. Federal employees and individuals applying for Federal employment should do the same. In 2011, the most recent year for which the IRS data is available, 107,658 current civilian Federal employees owed more than $1 billion in taxes. The average delinquency rate for Federal civilian employees was 3.62%, up from 3.3% in 2010, continuing an increase in recent years. As the Chairman indicated, the intent of the bill is simple. If you are a Federal employee or applicant, you should be making a good faith effort to pay your taxes or to dispute them, as taxpayers have the right to do. Under H.R. 249, individuals having serious delinquent tax debts are ineligible from Federal employment. Serious tax delinquent is defined as an outstanding Federal tax debt for which a notice of lien has been publicly filed. H.R. 249 exempts employees who are working to settle tax liabilities by excluding Federal tax debts. In 1, being paid in accordance with an installment agreement, offer of compromise, or wage garnishment. Number 2, for which a due process hearing is or request for relief from joint and several liability is requested or pending. Or 3, for which relief has been granted. The bill requires individuals applying for Federal jobs to certify they are not seriously tax delinquent. Agencies will also conduct periodic reviews of public records for tax liens. Individuals with serious delinquent tax debt may avail themselves to existing due process rights, including before the Merit Systems Protection Board. In addition, individuals will have 6 months to demonstrate that their tax debt is not serious delinquent. The bill also provides for a financial hardship exemption for employees. During the last Congress, for many of my colleagues on both sides of the dais, this legislation will sound familiar. In April 2011, the committee passed by voice H.R. 828, the legislation I sponsored last Congress, which is nearly identical. I remind my colleagues and commend for the bipartisan approach that was taken. I'd also recall that the gentleman from Massachusetts, Mr. Lynch, we were able to work together and include additional due process provisions. And that amendment by my friend, Mr. Lynch, ensured that employees were afforded appropriate due process, ensured that legislation would only affect those thumbing their nose at Uncle Sam. In addition, last July, the House passed H.R. 828, which was identical to the bill before us today when considered on the floor. It passed by a vote of 263 to 114. Federal employees are called to account for paying their taxes by the Code of Ethics for the executive branch. The Code of Ethics dictates that Federal employees, quote, must satisfy in good faith their obligations as citizens, including all just financial obligations, especially those such as federal, state, or local taxes that are imposed by law. This in the ethics statement from the executive branch. Despite these efforts, the percentage of federal employees with delinquent tax liabilities increased. The Government Accountability Office has stated voluntary compliance with tax law, the foundation of the United States tax system, could be undermined if the public perceives that federal workers and former federal workers successfully evade their tax obligations. Mr. Chairman, I have more in my statement, but I'll submit it for the record, and I would encourage my colleagues to support this piece of legislation today. Yield back.
I thank the gentleman. Ms. Norton.
Thank you very much, Mr. Chairman. And at the outset, I want to say I very much appreciate the changes that have been made in this bill, particularly the due process changes and the way in which Mr. Chavis has worked with others. I also appreciate the fact that there is a contractors bill coming up. That may be the only piece of legislation which mirrors how the committee has treated federal employees. That in itself is an improvement. The timing of this bill is particularly unfortunate. We are about to excuse me, consider the CR, which carries the third year of freezes for federal employees. It must be a terrible time to be a federal employee. But in a real sense, Mr. Chairman, let's put this in context. To the credit of this committee and of the Congress, we have not singled out federal employees for special treatment when the federal law already covers them. Indeed, it's very unusual to single out any Americans for special treatment, except perhaps criminals. In this case, we have exactly the opposite. We have federal employees who, on the average, and especially in times unlike these, in average times, are better at paying their taxes than the average Americans. My friend, Mr. Chaffetz, said we wouldn't want to create the impression that people who are paid by the federal government could avoid their tax liability. The only way they're going to, this issue is going to come up at all is not that the papers have written an article about such avoidance, but because this committee has come forward with a bill for which there is just no specific rationale. If the delinquency rate were greater, I could understand it. Now, understand, Mr. Chaffetz, that the delinquency rate has gone up in recent years. Wow! Why wasn't everybody paying her taxes the way she usually does during the Great Recession? What's wrong with you federal employees? This was a time when people could hardly pay their rent. This is not a time when we would hold any employees anywhere to very special legislation. The first thing one might say is, well, we got to look for a hole in the law, and there is a hole in the law that federal employees apparently squeak through. On the contrary, there is no such hole. There is only whatever political gain is to be made from holding federal employees once again up for special targeting. And by doing so, I do think we are creating the impression that somehow federal employees have taken advantage of the fact that they work for the federal government, and therefore our committee has rushed forward to make sure that is not the case. Finally, if I could say so, Mr. Chairman, the notice of a lien is no indication of tax liability. It is the functional equivalent of a complaint. Liability has not been shown, has not been declared, and any good lawyer working for the government beginning to see what she believes may be a delinquency will file a lien, and then the taxpayer comes forward to make the case or not. For lawmaking, especially for lawmaking that involves a special group there ought to be a rationale that is indisputable. I do not find it here. I cannot vote for this bill. Thank you, Mr. Chairman.
Would the gentlelady yield?
Be glad to do so.
Eleanor, over the last year plus since this bill came up the last time, and before I brought it here again, or Mr. Chaffetz offered it, but I scheduled it, I did a little looking and tried to come up with answers to these questions, some of which you mentioned more than a year ago. And I found two that I hope at least will be part of our consideration today. One of them was that the vast majority of serious delinquencies that occur due to non-government activity. In other words, government employees whose entire salary comes from, or entire income comes from their salary, seldom find themselves seriously delinquent. What normally happens is these are people who have outside interests, a family member who's run up various bills through a small business and the like. So one of the interesting things is when they're really big, it very seldom has to do with people who make a salary, and because most of their taxes are withheld. The second one, which was the bigger one, and hopefully this will carry the...
Who make a salary? But Federal employees mostly make a salary.
In other words, most Federal employees who their entire income or substantially is salary don't find themselves seriously delinquent. The ones that I think Mr. Chaffetz most often would find anecdotal examples of, they have an outside business, they close it down, they're in the arrears. That's often where it comes from. And again, that's the reason in my opening statement I mentioned that of the $1 billion, a great many of these are not going to be anywhere. They're not seriously delinquent under this term, or the normal workout is going on. But I think the important point, the one that I hope this committee, I hope it's the motivation for this committee, holding the contractors to the level we believe they should be, which is we're not going to let a contractor who, for example, doesn't pay in their withholding taxes from their employees and continues to be a contractor. That would be an example that occurs in business. If you're a Federal employee overseeing that contractor and you know you're held to the standard and you tell him or her that they've basically got 30 days to get it right or you're pulling the job, I think it empowers the Federal workers, particularly those working in procurement, to say, look, we're held to the standard and we're going to hold our contractors as standard. So I view this as an empowerment to a great extent of those of us who oversee the many contractors. And I think everyone on both sides of the dais believes that contractors who are not paying their taxes are the major target. But like many of our ethics rules, we hold a contractor to an ethics rule. We hold ourselves to the counterpart. Hopefully that will carry some consideration for you today.
I have to compliment the Chairman on digging very hard to find a possible rationale here. We're talking about...
It's my job, Eleanor.
We're talking, the vast majority of employees we're talking about are quite content to live from the salaries the Federal government pays them, but look how the net is pulling them into it. And I would ask the Chairman only whether he has indication of what percentage of Federal employees engage in private business, something I'm sure the Chairman would want to encourage. They'd probably be small businesses. And then of that number, how many are delinquent in the payment of their Federal income taxes?
I would assure the gentlelady that I will make sure our committee and Mr. Chaffetz have those figures before we go to the floor.
Thank you so much.
Will the gentlewoman yield? I know we're past her time, but we had testimony from the IRS, and it's her testimony is that roughly 12% of the people that fall into this category are going to be very directly affected by this. That was her testimony from the IRS last month.
Which category, sir?
Let me give you her whole statement so you see the complete.
But not necessarily the category of people who have small businesses outside of their Federal employment.
Correct. The people that would probably be most immediately affected as employees would be roughly 12%, according to her testimony.
Does any member wish to offer an amendment? The gentlelady from California, Ms. Spear.
Mr. Chairman, thank you. You know, this
I apologize. The clerk will read the amendment.
Amendment to H.R. 249, offered by Ms. Spear of California. Page 2, line 14, strike, for which a notice of lien has.
I ask unanimous consent that we waive the reading. The gentlelady from California is recognized to explain her amendment.
Mr. Chairman, thank you. This amendment changes the threshold for making Federal employees ineligible for Federal employment from the filing of a lien for tax delinquency of $10,000 or more to $25,000. The IRS threshold for when they will no longer allow for the withdrawal of a lien. We should make sure that the threshold for a serious tax delinquent, and that's in quotes, with the serious repercussions that would entail under this bill, is proportionate and is designed to maximize the Governor's ability to collect the debt. This bill is a solution in search of a problem, and even the Chairman said last session that due to the high rate of compliance among Federal employees, the legislation was purely symbolic. In fact, according to the IRS, the tax compliance rate for Federal employees, as the ranking member mentioned, is much higher than for the American public. But here's the most important part of all of this. It would be wrong to cut off our nose to spite our face. When you have a Federal employee who is working, the IRS is able to garnish wages at 15%, Mr. Chairman. And the point here is that the IRS is only allowed to garnish wages to 10% for the general public. So here we are, we have a Federal employee, they're in our line of sight, we're able to extract more of the tax debt that is owed to the tune of 15% instead of 10%, and they're employed. If they're fired, if they're terminated, we lose the ability to actually collect on the debt, and I think that's very important. This particular amendment, of course, would actually create the environment so that we are defining a seriously tax delinquency as being $25,000 instead of $10,000. And with that, I would be open.
Would the gentlelady yield?
I certainly will.
I just want to go back to something that Ms. Norton said, and it's interesting. Ms. Norton said that when you have a lien, that doesn't necessarily mean that, it just puts something into dispute. And then I want to go back to what the Chairman said about this was a very interesting and creative argument about these outside businesses. And it seems to me that if it's an outside business that has caused a problem, it seems like your amendment would fit would make even more sense based on what he just said. In other words, if somebody has gotten in trouble because of outside business, as the Chairman said, it seems as if the amount would probably be more. You follow what I'm saying? More than, say, the $10,000.
Correct.
And that's what. So it's just something. I was just sitting here thinking that maybe the Chairman has helped us to make an argument for your amendment, and I'll yield back.
Would the gentlelady yield?
I will yield. I will be happy to.
I currently understand that there's no number in the bill, that 10,000 really was anticipated from the IRS. Does the gentlelady have a particular reason for the 25,000 threshold she's chosen?
I believe that is consistent with what the IRS does in cases where they are non-Federal employees in terms of the withdrawal of a lien.
I'm not aware of that. Can you give me a citing? That
I don't have it, and I'd have to get back to you.
Okay. If staff could work together on that.
Mr. Chairman, could I further ask a question?
The gentlelady's time.
I yield.
What is the minimum necessary to post a lien in the first place?
Well, I know mechanics liens can be posted for virtually any amount of money. I don't think there's a limitation. So I think.
So we'd have to look at the practice of when it's practicable to post a lien.
Well, right now, my expectation is that we would be increasing it from 10,000 to 25,000. Now, the Chairman just said that there's no number in it. And maybe Mr. Chaffetz could respond to that question.
I don't believe there is the 10,000. I don't know where that comes from.
All right, so now any lien would subject a Federal employee from being terminated? That's even worse.
I'm sorry, what I'm told is that they will post a lien at a minimum of $10,000. That's when they'll post a lien. I would like to strike the last word and respond. I want to be careful, the gentlewoman.
Has the gentlelady concluded?
I have 1 second left, but I yield.
I recognize the gentleman to strike the last word.
Mr. Chairman, I am opposed to this amendment. What it seems to me is the lower the amount due seems even more egregious that they can't work out their differences. Let's just present a hypothetical that there's a $15,000. Okay, we'll kind of cut the difference. We'll go a little bit higher than the $10,000, but less than the 15, just for a hypothetical. If there's a $15,000 lien and they're going through the adjudication process, they're disputing it, they're trying to work it out, they want to enter into a garnishment, I mean, there's a whole variety of things. Nothing happens to this employee. The only way that this bill affects an employee is if they say, no, I'm not doing it. I'm not paying it. I'm not doing a garnishment. I disagree with it. I mean, they just absolutely, totally refuse. And from an amendment that was offered by Mr. Lynch last year, in which he said he would then support the bill, we extended that out another 6 months. So the smaller the amount, it seems to me, the more we have a problem on our hands if the person isn't able to work it out. They either make the case that they don't owe it, and again, they're not affected by the bill, or the number is so low, so much lower than maybe the perception of, gosh, I got this $150,000 problem. I've got just a $10,000 or $12,000 problem. Of course they should be able to work. Of course they should be able to get on some sort of garnishment plan and make those payments over the course of, I don't know, months or years.
Will the gentleman yield?
Those are the people that probably are problematic within that department and agency, and this allows, if there's financial hardship, I will in a moment, if there's financial hardship, if the secretary or the head of that agency wants to grant an exception for national security purposes, I mean, there are all sorts of outs. But the person who owes $12,000 is thumbing the nose at the taxpayer, continues to take dollars as income, refuses to comply with what was the conclusion of the IRS. They've gone through that 6 months. They've gone through adjudication. Yeah, they should be able to fire that employee because they are a problem.
Will the gentleman yield?
Yes.
I don't know if you've ever been in this situation, but I have. I had rented my home to a deadbeat, unbeknownst to me, who then, when we tried to get him evicted, placed the mechanic's lien on my home. That was then in dispute for a period of time. I think anyone who's gone through a remodel where they have paid in good faith to their general contractor and the general contractor has not paid the subs can also be in a situation where the subcontractor places a lien against them for the money that they have not received from the general. Now, those are real examples of what happens in real life.
But reclaiming my time, that's different than having a lien from the IRS. That is an independent financial dispute about contractors paying. We're talking about the IRS here, and there are all sorts of ways. One of the concerns, Chairman, that I have is in 2004, we weren't collecting about $599 million per year. Now that number, less than 10 years later, actually these numbers only 7 years later, is up over $1 billion. There are so many different outs in being able to work with these Federal employees if they're trying to do the right thing, if they're working it out, if it's in dispute, if they're trying. This doesn't kick in. It's only the most egregious of cases where we do what the IRS had to do years ago. That's what we modeled it after, is do what the IRS did internally in order to get the compliance rate even better, is give them the ability, give those that leadership within those departments and agencies the opportunity to fire those employees.
Would the gentleman yield?
Sure.
Let me ask you just two questions. I want to make sure it's on the record. One, is it the intent of your bill to have no greater a burden for any Federal employee than that which either the private sector would have in the way of garnishment or levels for liens, or for IRS employees?
Mr. Chairman, you're reclaiming my time. The intent is not to try to change IRS law in any way, shape, or form. We're trying to keep it exactly the same as it has been. We're just giving the departments and agencies the ability to hold their employees accountable and take care of a situation. And even then, there are exceptions if they believe so deeply that that person should continue to be employed.
Would the gentleman further yield?
Yes.
Is it true that under this bill, if a garnishment begins, by definition, they've satisfied?
Correct.
So let me just understand. If a lien is placed and they do nothing, but a garnishment begins, the employee cannot be terminated while, in fact, the 10% or so is being garnished.
Absolutely. They're trying to make whole. They're trying to do the right thing. They're on a pathway to get right with the Federal Government.
But if they dispute
None of this kicks in if that is the case.
disputes go on.
That's my intention.
I thank the gentleman.
Yield back.
We now recognize the gentleman from Virginia to strike the last word.
Thank you, Mr. Chairman. I move to strike the last word.
The gentleman is recognized for 5 minutes.
Mr. Chairman, I want to associate myself with the remarks of the distinguished ranking member and with the delegate from the District of Columbia. I was hoping that Mr. Chaffetz actually might consider accepting this amendment, because my concern, all of us think Federal employees, like everybody else, ought to pay their taxes. This committee has done some very important work, as you know, Mr. Chairman, in identifying how much is not collected every year that's left on the table that, by the way, could help us a lot in offsetting sequestration and some of the disinvestment that otherwise would be required. The context is that there's a very negative message to Federal employees and about Federal employees.
Will the gentleman yield?
Coming out of the Congress. And if I could finish my thought, and then I will. And I think we have to take care. We have to worry about recruiting and retention of the workforce of the future. I think what Ms. Spear has done here is give us a standard that's awfully hard to argue against. You've got other protections in the bill, and I appreciate that. And the bill has made changes from last time we considered it, which I also appreciate. But I think Ms. Spear has given us another step that allows us to say it really is the most egregious we're going after. Because, as my friend from Utah knows, and certainly my friend, the chairman from California knows, the IRS can make mistakes. The IRS can sometimes judge people guilty when they're innocent. And you may want to dispute that. You may not want to agree to a garnishment. By the way, I suppose it could be the private business of one's spouse that is the subject of such dispute. The IRS is not infallible in making these decisions. And so I think Ms. Spear has given us one more standard that allows us to say we're not just picking on anybody who may have an unresolved tax problem, but we're actually going after a dollar amount that almost any reasonable person would agree falls in that category of seriously delinquent. And now I'd be glad to yield.
Thank you. I appreciate it. Again, if it continues to be in dispute and they're going through the process by which they can have that adjudicated, there are processes in place, then it doesn't kick in. And it's only months after they've exhausted all of the remedies that they might have that this would kick in. Now, we're about to consider the next bill up, at least in the order, is the contractor bill. And the threshold there is $10,000. Is the gentleman suggesting, or the gentlewoman who's offering the amendment, that we would also move the contractors up to $25,000? Because I'm going to argue in the same...
Reclaiming my time, I'd be glad to yield to the gentlewoman from California to respond as she pleases.
I think for us to compare Federal employees and Federal contractors is, in some respects, inappropriate. Because a Federal contractor, first of all, with Federal contractors, they are in a situation where they're being chosen among many candidates for a particular contract. So it is discretionary We have Federal employees.
How is that different with a Federal employee? They were
Well, a Federal
chosen.
employee is employed.
But they were chosen. It's a privilege.
Well, but they were chosen before there was this tax lien or this tax
Not
debt.
under this bill. They would be excluded from applying.
Well, no, now they can be terminated.
Yeah, but if they're applying, sorry, with the gentleman, will grant me time.
Yes.
What we're saying is not only for existing employees, but also for, you can't even apply to become a Federal. Why would you bump up that threshold? It does address existing employees, but it also talks about future employees. Same thing with Federal contractors. These are people too. They got families. They got responsibilities.
But here's the difference.
That's the point, is to try to treat them the same.
Here's the difference. A Federal employee, you can garnish their wages. You cannot garnish the wages of a contractor.
The IRS has the ability to go after contractors and individuals who aren't paying their taxes. They can garnish and go after their wages as well.
Well, I believe you'd have to pierce the corporate veil in order to do that.
What the amendment here today is, should it be at $25,000 or should it be at $10,000? And I would argue that we go to the lowest number possible to give the maximum flexibility for that department and agency. Same thing I want to do with this Federal contractors.
The gentleman's time has expired. I'll now recognize myself. Perhaps just to add one small point. I've been a businessman, and the IRS pierces the corporate veil automatically as a matter of practice. They pierce directly to the officers and anyone able to write a check. So, in fact, the chief financial officer or a secretary who writes and signs checks can, in fact, be levied personally based on taxes not withheld and paid. The corporation itself has a slightly different standard for income taxes, but the most common problem for businesses, of course, is that they pay their employees the net, and they don't pay in the other taxes they're withholding. And this is the most common area. And with our contractors, this would be an area of deep concern, and it's usually exactly where we want them ineligible. So I do have, in listening to this discussion, I do feel that when you look at a typical business, $10,000 is by definition a much lower threshold than $10,000 is to one of us, even with our salaries. But having said that, I hope the gentlelady will settle for language in the final bill, if not here today, that assures her that the IRS will assert a standard no greater than what it asserts on its own employees. And I would hope that all of us can look and say the high standard of the IRS is the model for how we should all look at all Federal employees, particularly of concern of those who assert contracts. And I would yield to the gentleman. You probably need your mic on.
Thank you, Mr. Chairman. Is there anybody here from the IRS that can answer a question about garnishing and or negotiating a settlement? Not a specific one, but...
Well, there was at the hearing, so we have staff that were there. We can try and answer. What was the gentleman's question?
Thank you very much, Chairman. When a person is actually in a settlement and say they have payments or what have you, something's been negotiated, everything seems to be going fine, doesn't the IRS have the right at any time unilaterally to go ahead and say, never mind, we don't want to recognize that settlement anymore, we want full payment?
The gentleman is correct from my own experience on many, many employees. They have a right, but their remedy still boils down to a statutory limitation on garnishment and liens against certain assets. And if you don't mind, I want to yield to the gentleman from Utah to assure that as long as a garnishment is taking place, even while a lien remains on any or all assets, wouldn't they still be eligible for continued employment? I yield to the gentleman.
Yeah, my understanding of the way we've written this, the way we've tried to structure this, is they would still be employable. This would not apply to them. One of the things, for instance, that was brought up earlier was, what if a spouse, you're newly married, and then all of a sudden you're 6 months into it, and whoa, I didn't understand that. But there is a category, I'm told here by staff, called the innocent spouse relief, which would then exempt them out again from this. Look, the intention here of the bill is if you're trying to do the right thing, you're trying to get back on track, you're trying to get straight, even if you're in dispute and you're going through that, it's not going to be, but there comes a point where there's a certain percentage of these people who just say, forget it, and they're just thumbing their nose, and the problem's getting worse, not better. That's what we're trying to solve.
The gentleman from California.
Thank you very much. I appreciate that particular intent as you expressed it. I just want to make everybody aware in this country that the IRS does have the right to unilaterally move away from the agreed settlement, even if the person is actually paying in good faith, on time, et cetera. They have the unilateral right to go ahead and put it back into a lien, which unfortunately I would think that your bill would therefore have to recognize, if it becomes law, that the IRS has put that person back into the situation that this bill is trying to recognize.
Reclaiming my time, for the gentleman from Utah, would you agree that to any and all technical corrections that would ensure that the gentleman is correct, that if in fact the IRS is demanding full payment, has their lien, and does not feel satisfied, but is in fact garnishing, that this would not cause termination and would not require a special exemption?
Absolutely. The spirit in which we do this is if you're trying to get right and you're doing what you can and you're making some payments and you're moving, then absolutely this provision or this bill should not kick in. If there's a technical correction that we can make to clarify that point, I'm happy to do it.
Would the gentleman yield?
I would certainly yield.
Yeah, I just want to ask the question of the sponsor of the bill. You just raised a question, and I think we need to make sure this is clear before this gets to the floor. The innocent spouse, whatever you just said, relief. Let me tell you what concerns me about that. You're right. Somebody could get married, and the spouse is causing the problems. By the way, if you go to Google and Google the top 5 reasons why people get divorced, money is I'm telling you, I don't care what thing you go to, site you go to, one of the top 5 reasons is money. So I want to can you just elaborate on that? Because I think that's significant, Mr. Chairman. I mean, people get married every day, and I think we got like about a 50% divorce rate. And so I'm just wondering, somebody gets married, the spouse has a problem, and then the federal employee's been doing their work, been doing a great job, and then as the couple, the oneness suddenly turns into a person losing their job. I'm just curious. How does that work?
I'd ask unanimous consent that I have an additional 2 minutes without objection.
I have no objection.
To the gentleman from Utah to answer that.
My understanding is that the employer, or whatever the individual, can apply for this innocent spouse relief. There's also joint and several liability. There are a number of things that they can do in that process to try to make the case that that they're trying to make this right, that theirs was an undue burden that was placed upon them that caught them by surprise. But that's part of this process. Again, the adjudication, the moving through of this and this discussion with the IRS, it doesn't kick in. And then, based on the amendment offered by Mr. Lynch, we add time after that. And again, you can still go through the process and make the case to your boss or whatever, who again can grant you some relief. We're trying to take care of the most egregious.
Will the gentleman yield?
Reclaiming my time, I'd yield to the gentlelady from California this extended time.
Thank you, Mr. Chairman. I'm going to withdraw my amendment at this point, but I would like to ask the author to seriously consider, before the bill gets to the floor, creating an exemption for innocent spouse. Having dealt with some of these cases in the state of California, I can tell you they go on for a very long period of time. Oftentimes, it is a situation where the innocent spouse had their signature forged on an income tax return and was unaware of the debt that was incurred. And so that tax lien is very real and can, in fact, cause termination of an innocent spouse, which I think we should be loath to do.
Reclaiming my time, the gentleman from Utah.
Listen, the gentlewoman has been very good in working with us on these issues and on the next bill as well. She's a co-sponsor of that bill. I'd be happy to do that. That's the spirit in which we offer this. If somebody's trying to do the right thing, we all run into trouble at some point in our life. But if they're trying to make right, they're trying to get back on track, of course we want them to continue to be employed. But we do need to take care of the few that are just thumbing their nose. And so I appreciate the spirit in which she offers that. I will work with her to try to clarify it before we bring to the floor. I think that's something that we could certainly do, Mr. Chairman.
Thank you.
Mr. Chairman, I have a question, just literally a question.
The gentleman is recognized for a question.
It appears that what I couldn't figure out, and I asked the staff to get me some language, is when garnishment can occur. And it appears that the Federal Government can begin to garnish your wages after 30 days of a final notice through what they say is a continuous levy on certain Federal payments. And then they list what these payments are, annuities, and of course your salary, and there's some others.
Right.
So why do you get to the lien if they're already garnishing your pay?
What normally happens, if the gentlelady would yield, what normally happens is that the IRS perfects a lien quickly. They begin a garnishment process based on an administrative process. What's unusual about the IRS, but necessary, is essentially they try you, and if you don't like their decision, you administratively object, and then if you still don't like their final administrative decision, you then have your leave through the Federal courts.
Are they garnishing the whole time?
No, no. As soon as you appeal, the garnishment stops. And one of the challenges, and what I'm going to do, if the gentlelady would continue yielding, is I'm going to ask a series of questions on both of these bills, submit them to the IRS, and make sure that we get a series of answers as to procedurally what they do for the IRS employees, how this bill would relate, and since the gentleman had agreed to it, I'm going to instruct staff to prepare any and all technical changes that would be necessary for a manager's amendment to ensure that, in fact, one, we know about what the IRS does, and two, that this bill would not raise in any way a higher burden than on the public as a whole for levying, or, in fact, how the IRS treats their employees. I recognize the gentleman from Maryland.
Just one thing, Mr. Chairman. We just made a minority join in on that letter because we will have some questions, too, so that we can all be.
Totally my intention.
Thank you.
Thank you. And the gentlelady does choose to withdraw her amendment. The amendment is withdrawn. Does anyone else offer an amendment? Hearing none. The question is on the bill, H.R. 249. I move the Committee on Oversight and Government Reform report H.R. 249 to the House with a recommendation it do pass. The question is on favorably reporting H.R. 249 to the House. All those in favor signify by saying aye. Aye. Any opposed, no? No. In the opinion of the Chair, the ayes have it. The ayes have it. The motion is agreed to. H.R. 249, the Federal Employee Tax Accountability Act of 2013, is ordered reported to the House. 1 down, 12 to go. The committee will now consider H.R. 882, the Contracting and Tax Accountability Act of 2013. The clerk will designate the bill.
H.R. 882, a bill to prohibit the awarding of a contract or grant in excess of the simplified acquisition threshold unless the prospective contractor or grantee certifies in writing to the agency awarding the contract or grant that the contractor or grantee has no serious.
I ask you to ask consent be considered as read, and without objection, H.R. 882 will be considered as read and open amendment at any time. The text has been distributed, is in your folders. I recognize myself briefly because I believe this is déjà vu all over again. The Contracting and Tax Accountability Act of 2013 is a bipartisan piece of legislation that does not suffer some of the same questions that occurred on the previous bill. In fact, I believe that it has been well discussed and is without question a bill that is long overdue. This passed out of our committee in the last Congress. It deals with the $5 billion in unpaid Federal taxes, and in fact, I believe to a great extent is one in which we recognize that contractors, in order to be good contractors, not only have to pay a fair wage to their employees, they have to turn in the taxes withheld to the IRS. And this is the reason that I strongly urge my colleagues to support the bill. And with my remaining 4 minutes, I would yield to the author for his limited opening statement.
Thank you, Mr. Chairman.
Hint, hint.
I got rid of, okay. Last Congress, the Contracting and Taxability Account of 2011 Act of 2011, legislation similar to H.R. 882, it passed. The committee by voice vote, and H.R. 882 is identical to this committee as we passed in the last Congress. Mr. Chairman, I'd like to remind my colleagues that last Congress this bill was passed on a bipartisan basis, and I really appreciate the good work of my colleague, the gentlewoman from California, Ms. Spear, and her support of this bill. H.R. 882, the Contract and Tax Accountability Act of 2013, has a very simple purpose: to prohibit companies with serious delinquent Federal tax debts from doing business with the Federal Government and receiving new Federal contracts. I would also remind my colleagues that in the 110th Congress, then-Senator Barack Obama sponsored the Senate companion Contractor and Tax Accountability Act to Congressman Ellsworth's legislation, but unfortunately the legislation did not pass on either body. However, as President, Mr. Obama has continued to fight to hold contractors accountable. On January 20th, I have a statement that I'd like to enter into the record in which the
Without
President—
objection, so ordered.
Thank you. H.R. 882 establishes a process through which persons serious delinquent Federal tax debts may be prohibited from receiving Federal contractors and grants. The legislation is designed to mandate that tax compliance be a prerequisite for receiving Federal contract. As the Chairman knows, the Federal Acquisition Regulation, known as the FAR, was revised in 2008 to require contractors to certify they do not have delinquent tax. This would, in essence, codify that. Like the Federal Employee Tax Accountability Act, this legislation is meant to affect those thumbing their nose at Uncle Sam. The Government Accountability Office has reported that the government contractors owe over $5 billion in unpaid taxes. I would encourage my colleagues to sponsor that, and that is my briefest edited version of my opening statement.
And I thank the gentleman. I now yield to the gentleman from Maryland for his opening statement.
Thank you, Mr. Chairman. H.R. 882 is identical to the bill introduced in the last Congress by Representative Chavis, and is very similar to the legislation reported by this committee and passed by the House in the 110th Congress. I supported the legislation then, and I support it now. The Government Accountability Office has reported that government contractors owed more than $5 billion in unpaid Federal taxes in 2004 and 2005. Unpaid taxes owed by contractors included payroll taxes, amounts required to be held from employee wages, as well as corporate income taxes. GAO has also found that some contractors with unpaid tax debts are repeat offenders that have failed to pay their taxes over many years, including in one case almost 20 years. H.R. 882 will allow the Federal Government to make sure that contractors seeking to do business with the Federal Government have paid their taxes before they can receive a Federal contract. The Federal Acquisition Regulation was revised in 2008 to require contractors to certify that they do not owe a delinquent tax debt to the Federal Government. This bill builds on that requirement by providing Federal agencies a means to verify contractors' claims. This legislation will also ensure that responsible contractors no longer have to compete with tax delinquents. With that, I urge the members to vote in favor of the bill, and I yield back.
I thank the gentleman. Does any other member wish to speak on the bill? I will hold the record open until the end of the day for any member. Oops. Okay. Well, I will still hold it open for any member who wishes to submit a written statement, and I would recognize the gentlelady from California to strike the last word.
Strike the last word. Thank you, Mr. Chairman. I will be brief. One point to make about this bill, and I wholeheartedly support it. If you are an existing contractor and have a tax lien, my understanding is that you are not terminated, or your contract is not terminated because of that tax lien, and it probably has something to do with the initial contracting, but we should fix that moving forward. And I would just like to make this point. The government oftentimes is a wuss. And I want to give you 3 examples.
Is that a technical term, and is
yes,
it defined?
It is. It's a technical term. And I just want to give us 3 examples of why this is so important. The owners of Leone Industries, a DoD PR contractor, owed $4 million in Federal taxes when the contracts were awarded. One company owner who owed over $1 million in taxes was paid over $1 million as a defense contractor, and it was subsequently found to use the money to buy boats, some cars, and a home abroad. And even the Treasury Inspector General for Tax Administration found 11 IRS contractors receiving more than $356 million in payments from the Federal Government in 2009, despite owing a combined $3.8 million in back taxes. That's why we are wusses.
Gentlelady yields back on that. Does any other member wish? The gentleman from Texas, do you wish to strike the last word? You do not. Does any member wish to offer an amendment? If there is no further discussion, I move the Committee on Oversight and Government Reform report H.R. 882 to the House with a recommendation it do pass. The question is on favorably reporting H.R. 882 to the House. All those in favor signify by saying aye. Aye. Opposed, no. In the opinion of Chair, all ayes means it passes. The motion is agreed to. H.R. 882, the Contracting and Tax Accountability Act of 2013, is ordered reported to the House. The committee will now consider H.R. 313, the Government Spending Accountability Act of 2013. Would the clerk please designate the bill?
H.R. 313, a bill to amend Title V, United States Code to institute spending limits and transparency requirements.
Without objection, H.R. 313 will be considered as read and open for amendment at any point. The text has already been distributed and is in each of your folders. I recognize myself for a short opening statement. 10 months ago, the committee held a hearing on the now infamous GSA Las Vegas conference that cost the taxpayers more than $820,000. Shortly following that boondoggle, and justifiably the public outcry that occurred, the Office of Management and Budget issued a memo in May 2012 outlining new policies and procedures for Federal travel and conferences. The OMB guidance instructs the heads of Federal departments and agencies for fiscal year 2013 to reduce travel and spending to 70% of FY 2010, or a 30% reduction. In addition, the OMB memo offers new rules for conferences, such as requiring senior-level review of all planned events, senior-level approval of public reporting of those in excess of $100,000, and a general prohibition on those costing more than $500,000 unless the head of the agency provides a waiver. We recently learned during fiscal year 2012 alone there were more than 900 Federal conferences that cost in excess of $100,000. The total cost of these events totaled a whopping $340 million. Just last month, Chairman Farenthold subcommittee held a hearing on Federal agency spending and travel and conferences. His hearing uncovered significant amount of waste, including a conference where an agency was spending more than $47 per employee just for lunch, and in which more than a third of the conference budget was spent and dedicated to administrative costs and fees. More importantly, a number of items surfaced, such as a $53,000 payment to a contractor to set up at a local hotel for essentially local Beltway employees a conference. Nothing could be more an abuse of our system than to provide that kind of outside payment for something as simple as meeting at a hotel for a conference. Last year, the committee reported a bill called Government Spending Accountability Act, GSA Act, that was adopted by the full House. Before her retirement earlier this year, Representative Joanne Emerson, who chaired the Appropriations Panel with jurisdiction over general government expenditures, reintroduced the GSA Act as H.R. 2013. Upon her retirement, Chairman Farenthold subsequently assumed primary sponsorship of the bill. H.R. 313 codifies OMB travel and conference guidelines with some important changes. While exempting military travel, the bill would ensure agencies actually do achieve the 70% spending level in 2010 for non-military travel. The bill requires agencies to post, and I think this is one of the more important things that Ms. Emerson included, to post online on a quarterly basis detailed itemized reports of all conference spending, including the cost-benefit analysis of conducting the conference, instead of a teleconference or some other means. And it requires that materials presented at the conference by Federal employees be made available publicly and online. I urge the members support this good government bill, as we did in the last Congress, and I recognize the ranking member for his opening statement.
Mr. Chairman, I support the purpose and the concept of H.R. 313, which would increase transparency surrounding Federal travel conference spending. And I hope that the committee will adopt two common-sense amendments to address some legitimate concerns that were recently brought to our attention. Last year, we became aware of the extensive fraud, waste, and abuse that occurred in conjunction with the General Services Administration's 2010 Las Vegas conference and the Department of Veterans Affairs' 2011 Orlando conference. These incidents must never be repeated. I certainly agree that enhanced oversight of agencies' travel and conference spending by Congress is warranted, and for that reason, last Congress I supported this bill during committee consideration. During subsequent floor debate on that bill, Representatives Rushholt and Eddie Bernice Johnson raised concerns about potential negative consequences some of this bill's original provisions could have on the scientific community on the government's efficiency and on the government's efficiency. In particular, they were concerned that the measure would make knowledge sharing and collaboration in the scientific and professional communities more difficult and therefore inhibit innovation and economic growth. Representative Johnson also noted the burdensome nature of this measure's reporting requirements. The bill requires that a cost-benefit analysis be conducted for every single conference, regardless of cost. Representative Johnson felt that this would add an unnecessary layer of bureaucracy and inefficiency to agency operations. During last month's Federal Workforce Subcommittee's hearing on travel and conference spending, Congressman Holt reiterated his concerns about the bill. I share Representatives Holt's and Johnson's concerns and believe that H.R. 313 can be improved by two amendments that will be offered by Mr. Lynch, and I understand that Mr. Lynch is not here today, and they will be introduced by Mr. Clay. I urge the majority to accept both amendments, and I yield back.
I thank the gentleman. I'll hold the record open to the end of the day so members may submit the written statements. Does the gentleman from Texas wish to be recognized?
I do, Mr. Chairman. I have an amendment in the nature of a substitute.
The clerk will designate the amendment.
Amendment in the nature of a substitute to H.R. 313, offered by Mr. Farenthold of Texas.
Without objection, the amendment will be considered as read and open for amendment at any point. The text has already been distributed and is in each of your folders. I now recognize the gentleman from Texas, Mr. Farenthold, to explain his amendment.
Thank you, Mr. Chairman. My amendment makes mainly minor technical changes to the legislation. The only real substantive change to speak of is it revises the definition of conference in the legislation. Currently, an employee would have to travel at least 25 miles to a conference in order to trigger the reporting requirements of H.R. 313. Without striking the mileage exemption, which this amendment does, the Federal agencies could hold countless lavish conferences, say in National Harbor, Maryland, a mere 10 miles outside of Washington, D.C., and the cost would remain unreported to the American people. Mr. Chairman, this is a pro-transparency, common-sense amendment, and I urge its adoption.
I thank the gentleman. The gentleman yields back. Does any member wish to offer an amendment?
Mr. Chairman.
I'm assuming Mr. Clay would like to be recognized?
Yes, Mr. Chairman.
The gentleman is recognized to offer an amendment.
Thank you, Mr. Chairman. I have an amendment in the nature, an amendment to the amendment in the nature of a substitute at the desk.
The clerk will designate the amendment.
We have two Lynch amendments, sir.
It's number 16.
Thank you, sir.
Okay.
Between 1 and 2, it's 16?
Yeah.
Amendment to the amendment in the nature of a substitute to H.R. 313, offered by Mr. Clay.
The gentleman is recognized on his amendment.
Mr. Chairman, this amendment will allow an agency to waive the arbitrary 50 attendee limit on international conferences in the agency head, if the agency head determines that allowing additional attendees is critical to the agency's mission. The science and research community has objected to the indiscriminate attendee limitations in the underlying bill as hindering researchers' opportunities to exchange information and collaborate on vital research projects. Many of the federal government's science agencies, including the National Institutes of Health, send hundreds of researchers and scientists involved in many different critical projects to conferences such as the International AIDS Conference, placing an arbitrary cap on the number of scientists who can attend such conferences would impede the ability of our nation's scientists to innovate. And without innovation and new discoveries and technologies, we weaken our country's ability to grow our economy and to compete in the world. I therefore urge my colleagues to vote in support of this amendment, which would give agencies the discretion they need to waive the cap in cases where it would support a critical agency mission.
Would the gentleman yield?
Yes, I yield.
The Chair is prepared to accept this well-thought-out amendment. It certainly appears as though it makes more sense to have the agency that knows the reason for sending people to these conferences provide the waiver rather than the Secretary of State, and we're prepared to accept it.
Thank you, Mr. Chairman. I yield back.
Gentleman yields back. Is there any further discussion on the amendment? Hearing none. Okay. As there are no further, whoops, the gentleman from Pennsylvania.
Thank you, Mr. Chairman. Mr. Chairman,
You're recognized to strike the last word.
Thank you. May I move to strike the last word?
The gentleman is recognized for 5 minutes.
Mr. Chairman, I am reviewing this legislation, and as I listen to my colleagues, I think accurately point out the chilling effect this might have with respect to the ability for research and development and other kinds of things in the scientific community. I hearken back to an earlier period in my own life as well where I participated in national conferences on behalf of groups like the Department of Justice. I can imagine the same circumstances occurring with the Security and Exchange Commission, for example. And during those conferences, there are a lot of issues that are discussed and need to be discussed openly, in which there are presentations which are made that are forward-looking with respect to issues that may be prerogatives or issues in which those important agencies may be looking at taking certain kinds of actions. There are often matters which are discussed, presentations made, in which there are issues that my sense ought not be publicly made available. And as a result, I know that there is something where the Attorney General or whoever the agency head in this language may be able to certify, but I think the obligation then to go back at every kind of a conference and piecemeal include what is and what isn't is going to be a bureaucratic nightmare and will have a chilling effect on the ability for that group to get together. And I can tell you, you must get together with your 94 colleagues minimally, as well as others who are trying to uniformly prosecute the laws of the United States. And so to the extent that we're doing something that's going to affect critical agencies like the Department of Justice, perhaps the Securities and Exchange Commission, and there may be other representations, I think we have to think through the implications of this before we move forward.
Would the gentleman yield?
Yes, I will.
It is our intention to move forward. However, I take seriously and would offer to the gentleman that we would send letters to each of the agencies asking if the language currently there is thorough enough. I might mention, with a limited note of sarcasm, that the Attorney General has marked almost everything they do at all times as in the national security. So I would expect that we'd be very lucky to get the notice that there was a clown at an event with some agencies. So although I take seriously, and we will go for comment to the agencies to make sure the language is thorough enough to include any and all sensitive material not normally distributed to the public, the intent of the bill is obviously to make sure that we know what the conference was about, what it was justified for, and of course the expenditures, including expenditures such as the ones we've seen for clowns and movies and so on.
Would my colleague yield?
Yes.
I thank my colleague. I want to associate myself with his remarks. I think this is a bill that's well-intentioned and designed to try to reform a mess that occurred with one agency and to make sure it does not recur. I am worried about unintended effects, and I share the gentleman's concern. This can have a chilling effect we might not even measure. I mean, some people just give up. We're not even going to bother. And, you know, in the private sector as well as the public sector, we know that often the most creative and entrepreneurial dynamics occur in informal settings, where all of a sudden I meet a colleague I didn't know, and we start talking about what we're doing, and an idea happens, a good one. And so I do worry, Mr. Chairman, about the unintended effect, chilling effect. And I know that we've heard from others in the scientific community, for example, not just the legal community, about that concern. And so I do want to associate myself with the gentleman from Pennsylvania in that regard. Thank you.
Well, I thank the gentleman from Virginia for his for his comments, and I am concerned again that while this Attorney General may take a particular position regarding things, of course this will encumber all Attorneys General moving forward as well, as which there's a fairly good chance the gentleman to my right will one day be the Attorney General of the United States. And so I'm acting on his behalf right now.
Wait a minute. I might have to withdraw all of the comments I just made, Mr. Chairman.
Would the gentleman yield?
Yes, yes.
I happen to know that the gentleman to your right is smarter than to take a job like that.
Thank you for taking my issue into consideration.
Thank you. I do. I might note for the record that the Office of Management and Budget was sent a letter asking for a technical review. We have not yet received it. It is our hope that the primary source for any questions in this area as to what should not be reported would come from the Office of Management and Budget, and I will work with the ranking member to ensure we get that before we go to the floor.
Mr. Chairman.
Mr. Clay.
Mr. Chairman, I have another amendment.
Wait a second. We haven't disposed of this one that I'm going to take.
Oh, I thought we had voted. I'm sorry.
If there is no further member seeking recognition, the question is on agreeing to the amendment offered by the gentleman from Missouri, Mr. Clay. All those in favor signify by saying aye.
Aye.
Any opposed, no. In the opinion of the chairs, the ayes have it. The ayes have it.
Mr. Chairman.
For what purpose does the gentleman seek recognition?
I have another amendment.
The clerk will read the amendment.
Substitute.
Amendment to the amendment in the nature of a substitute to H.R. 313.
I move that the amendment be considered as read.
Without objection. The gentleman is recognized to explain his amendment.
Mr. Chairman, perhaps this will allay some of the fears of my friends from Pennsylvania and Virginia, but this amendment will set a minimum cost threshold of $50,000 for conference spending before the reporting and posting requirements in the underlying bill are triggered. If this amendment is adopted, agencies will have to provide detailed reports and post information on conferences costing more than $50,000. And this sets forth a very broad definition. The amendment in the nature of a substitute sets forth a very broad definition of conference. It defines conference to mean a meeting, retreat, seminar, symposium, or event that is held for consultation, education, discussion, or training and is not held entirely at a government facility. The base text would require the detailed reporting and posting of all agency conferences or meetings falling within this criteria, regardless of the cost of the conferences. This would create an undue burden on agencies, requiring them to incur administrative costs that take away from their already limited budgets. In addition, such a broad definition of conference, combined with a detailed reporting requirement, would in some cases cost the agency more to report on than the actual cost of the conferences. Sensitive to the additional burden and administrative costs placed on agencies, the Office of Management and Budget Directive issued to agencies in May of 2012 regarding travel and conference spending set a minimum threshold of $100,000 for triggering the reporting requirement. I think that minimum threshold is too high. I believe that $50,000 is a more appropriate threshold, and I urge my colleagues to.
Would the gentleman yield?
I yield, Mr. Chairman.
I agree with the gentleman that although the $100,000 is clearly too high, it was helpful for us to see those 900 conferences, and I think the Office Management Budget did us a favor by narrowing the scope of the number that we would see so that we look at the big ones and see where the continued problems tend to be. I do not support currently the $50,000 threshold, but if the gentleman would withdraw his amendment, I would seek to find a level greater than zero that both the Office of Management Budget and the author of the amendment would feel would be reasonable, so that we not burden a conference of $20 or $200 or $2,000. I certainly think that we want to get above the de minimis level.
Not to get, reclaiming my time, Mr. Chairman, not to get into a bidding proposition here, but would.
Well, if you do it with Lynch not here, you'd have a problem.
Well, I would suggest somewhere in the neighborhood of maybe 10,000.
Mr. Chairman, who's got time?
It's his.
I yield.
Just for one moment. You know, when I read, first of all, I think that's a good solution, Mr. Chairman, because the way this is set up now, this amendment, if you took a cab and went across the street to meet with some folk to have a conference, you got to post. I mean, really, that's the way it's written. And I don't know whether that was the intention of the author of the amendment. I think it makes sense, Mr. Chairman, that for us to work with this. I mean, we want to make sure that we address the conference problem, but we need to do it in a way that makes sense. I yield back.
If the gentleman would further yield.
Yes, I yield.
In consultation with staff, although we believe we still would need to get presentation material, no matter how de minimis a particular event was, we're prepared to accept a $10,000 level in order to dispose of very small conferences.
I cannot reject that offer.
Then would the author of the bill accept that that would be, that staff would make the technical corrections to have it, the threshold be 10,000, but that all materials be reported?
Yes, I do.
With that, I would support the amendment. Does anyone else wish to speak on the amendment? If not, if no further members are seeking recognition, the question is agreeing to the amendment offered by the gentleman from Missouri, Mr. Clay. All those in favor say aye. Aye. I might say, all those agreeing to the amendment as amended by the gentleman from Missouri signify by saying aye. Aye. Those opposed, no. In the opinion of the Chair, the ayes have it. The ayes have it. The amendment is agreed to. Are there any further amendments?
Mr. Chairman.
Yes, the gentleman is recognized.
Mr. Chairman, I have an amendment to the amendment in the nature of a substitute at the desk.
The clerk will read the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 313 offered by Mr. Pocan of Wisconsin.
The gentleman is recognized to explain his amendment.
Thank you, Mr. Chairman.
Is it being, okay, go ahead. Will they distribute it?
Sure. While many disagree with the wasteful expenditures that prompted this bill, the travel restrictions as written could produce unintended consequences that would limit the ability of government agencies to perform their jobs. I want to point out from the get-go that this travel would not be free from oversight. Agencies would be required to report these waivers annually to Congress, and they would need to explain their importance to the ability to serve the public. What this amendment does essentially is two things. First, it would permit waivers of the travel restriction by agency heads when it is important to the agency mission, is cost-effective, or is critical to government functions, and would require those annual reports to Congress while the restrictions are in place, detailing both the justification of any waivers as well as the effects of the restrictions overall. And then secondly, it would reduce the years that this is in place by 2, from fiscal year 18 to fiscal year 16. This would allow us to reconsider the effectiveness and reevaluate the levels of funding, since it maintains the level at 70% of the fiscal year 10 budget for each year without taking into account the rate of inflation. The rationale essentially is this is a particular concern to the scientific community, as we've discussed, which relies essentially on face-to-face interactions to share best practices in research. For safety inspectors, they must have the safety inspections conducted on-site. That requires them to travel. And I think we can all agree it would be inefficient to hire one safety inspector for every county in the United States, but it's more efficient to have a few safety inspectors that travel. It'd also be efficient to bring veterans with job and benefit training to a conference setting. In fact, many of the yellow ribbon programs under the Department of Veterans Affairs are carried out in conference environment. Similarly, FEMA must prepare for emergencies by conducting training and planning exercises with local enforcement, state government, and the National Guard in the private sector. Oftentimes, these exercises are too large for government facilities and have to take place at conference centers. So we must ensure that H.R. 313 is not an indictment of all travel, but we must ensure that H.R. 13 protects the most critical functions of government. And we can ensure that by making government more lean and effective, but not more cumbersome and inefficient. That's why my amendment focuses the bill on federally sponsored and planned conferences, and that's why it will keep in place the tough 30% cuts required by H.R. 313, but it shortens the length of the bill so we can be sure that agencies are implementing these cuts in the most effective way possible without harming the most critical functions of government. And I'm not suggesting that we support wasteful expenditures, nor am I suggesting that agencies should not have to justify their expenditures. Again, this amendment would simply allow agencies to waive these stringent restrictions when it is critical to the agency functions. They cannot do it without impunity. They'll have to make reports to Congress, not only on these waivers, but also on the effectiveness and the restrictions placed on them. I would urge members to support my amendment, and I'd yield.
Would the gentleman yield?
Sure.
I'm not prepared to accept this in its current form, but I would be more than willing to work with the gentleman from Wisconsin and the Office of Management Budget to ensure that such adjustments as OMB would agree need to be made in the President's initial 30% or 70% of previous year spending reduction be adhered to. I recognize that although this amendment would be, in my opinion, slightly overly broad, that in fact there are certain things which may have previously been lumped into the term conference that OMB would consider to be essential travel. For example, as the gentleman said, if you go to inspect meat, it's not a conference. So with that, if the gentleman would withdraw, we would work with him and OMB to ensure that the base number is correct.
Sure. I'll reclaim my time. Mr. Chairman, I appreciate that. And being new, this is a new process for me. I would be more than glad to withdraw it with that commitment that we could work on that. And also, perhaps if we could continue to work on that timeline. I do think that having something with that long of a timeline out, if we could shorten that a little bit and look at some of the other provisions I discussed, at least in conversation, would be helpful. I want to make sure that we're not handicapping the agencies too bad and that we're not making it look to the public like somehow traveling to conferences in and of itself bad. I used to work for a trade association. I know the value of these, and I'd like to make sure that we're able to have that conversation. I appreciate it. So I would withdraw the amendment.
The gentleman withdraws. Are there any further amendments? If there are no further discussion, the question is on the amendment in the nature of a substitute. All those in favor signify by saying aye. Aye. Those opposed, nay. In the opinion of the Chair, the ayes have it. The ayes have it. The amendment in the nature of a substitute is agreed. I move the Committee on Oversight and Government Reform report the bill H.R. 313 to the House with the recommendation it do pass as amended. The question is, on favorably reporting H.R. 313 to the House as amended, all those in favor signify by saying aye. Aye. Any opposed? No. You want a recorded vote? The gentleman is a no. I heard one no, but in the opinion of the Chair, the ayes have it. The ayes have it. The motion is agreed to, and H.R. 313 is ordered reported to the House as amended. I ask unanimous consent that the staff be authorized to make necessary and conforming technical changes, including those spoken of earlier, to the bill without objection. So ordered. The committee will now consider H.R. 328, the Excess Federal Building and Property Disposal Act of 2013. The clerk will designate the bill.
H.R. 328, a bill to establish a pilot program for the expedited disposal of Federal real property.
Without objection, H.R. 328 will be considered as read and open for amendment at any point. The text has already been distributed and is in all of your folders. I recognize myself briefly for an opening statement. The American people know their government is too big, too costly, and too slow to reform. What they are only now discovering is that one major area of concern is excess property. One way we must reduce the size and spending of government is its fiscal footprint by eliminating the costs associated with maintaining unused and underutilized Federal properties. The Federal Real Property Management Federal Real Property Management has been on the GAO high-risk list since 2003 and is nowhere close to being removed. The Federal Government has over 77,000 properties that the Government Accountability reports are vacant or underutilized. Again, 77,000 properties that are currently underutilized or empty. The GAO estimates that taxpayers spend just in maintenance of these facilities $1.7 billion each year. The Government can save this money with no loss, I repeat, no loss to any taxpayer or any Federal employee for their necessary facilities. Eliminating this is now a top priority of this committee, one that I believe we have a real opportunity to push through in the days to come. Additionally, by disposing expeditiously of Federal property, whether by gift or by sale, in most cases this property goes into more productive use, helps improve the community that it is in by being occupied and useful, and very often produces the kind of tax base that helps the community. Since Federal buildings do not pay taxes, it is in fact a two-edged sword, an empty building that blights the community and a lack of tax revenue to that community. I might recognize that one of the areas that is constantly spoken of is in fact here in the District of Columbia, in which we have a great Federal footprint. We need to make sure that our Federal footprint is fully utilized, and if not fully utilized, is made available to the people of the District of Columbia. H.R. 328 was introduced by Mr. Chaffetz along with Mr. Quigley of Illinois, who served on this panel last Congress. I want to thank both of them for working together to craft a bipartisan bill. They succeeded in drafting legislation that can reduce the government footprint while maintaining the legitimate interest of those who provide services to the homeless. As a result, the House has adopted their legislation in the last Congress unanimously. H.R. 328 was reintroduced and is virtually the same, making sure the American people do pay for what they need and don't pay for what is unused or underused. For that reason, I want to commend the authors of the bill and recognize now Mr. Cummings for his opening statement.
Thank you very much, Mr. Chairman, for considering this important legislation on Federal real property disposal. Our committee has been a leader in examining deficiencies in real property management and attempting to find bipartisan solutions to these difficult issues. The bill before us is such a measure. The Federal Government has costly and pressing problems disposing of its unneeded real property. Unnecessary and underutilized buildings are languishing in the Federal inventory instead of generating much-needed revenue. Maintenance of these buildings costs the government nearly $1.7 billion in fiscal year 2010 alone. In tough times like those we have today, the Federal Government must pursue every avenue to rein in spending and generate revenue. H.R. 328 creates a timely and workable method of disposing of excess Federal property. The bill would dispose of the 15 highest value excess Federal real properties through a 5-year pilot program. The fair market sales will generate income, and maintenance and operating costs will be cut. Critically, H.R. 328 also preserves the rights of organizations dedicated to helping those most vulnerable among us, the homeless. This legislation would fund grants to eligible organizations serving the homeless out of the proceeds from each of the high-value properties the government sells. This preserves our commitment to the ideals of the McKinney-Vento Homeless Assistance Act and ensures that we continue to serve all of America, even when the nation is tightening its belt. The legislation also serves an important transparency function by requiring GSA to report annually on the number, market value, and deferred maintenance costs of all executive branch real property assets. I urge the members to support H.R. 328. With that, Mr. Chairman, I yield back.
I thank the gentleman. I'm going to go down in order of seniority. I first want to recognize for a short statement the gentleman, Mr. Mica, and I want to particularly thank. Okay. Well, then I will skip the gentleman from Florida. Okay, and go to the author of the bill, Mr. Chaffetz.
I thank the Chairman and Mr. Mica as well, who's been passionate about this issue as well. With your support a year ago, literally today, H.R. 665, a piece of legislation that was identical to the bill before us today, was considered on the House floor and passed by a vote of 403 to nothing. It included an important amendment for Mr. Conley, and I appreciate his work and passion on this issue and his support for this bill. Also, Mr. Quigley from Illinois, who is passionate about this issue and very important in crafting this piece of legislation. Mr. Chairman, as you are aware, the Federal Government is the largest single holder of real property in the United States with more than 900,000 buildings and structures. The GAO reported last year that the Federal Government holds nearly 78,000 properties that are classified as either non-utilized or underutilized. And these properties, Mr. Chairman, cost the American taxpayers nearly $1.7 billion every single year. The fact that we continue to hold on to these properties year after year is totally unacceptable and must stop. The Federal Government has accumulated excess properties because the disposal process is flawed. Every year, as you noted, the high-risk series update since 2003, GAO has designated Federal real property management as high-risk, as a high-risk area to the Federal Government, and was highlighted in a hearing we held in this committee just last month. The bill would streamline the disposal process of high-valued properties while also overhauling the existing disposal process. The bill creates a 5-year pilot program that would expedite the disposal of Federal property with the goal of maximizing profit. 98% of proceeds under the pilot would be directed to the U.S. Treasury General Fund for debt reduction, while the other 2% would be authorized to be appropriated and made available for use by homeless assistant providers to purchase or rehabilitate real property strictly for use by the homeless. And, Mr. Chairman, let me take the opportunity to mention the homeless and homeless assistance providers, whom are often falsely accused as being the reason why Federal Government struggles to dispose of unneeded properties. As members of the committee know, the homeless and homeless assistance providers are not the cause of government's property mismanagement, and H.R. 328 ensures statutory considerations to the groups remain in place. At this time, I would also highlight a letter that we received from the Executive Director of the National Law Center on Homelessness and Poverty, who is in support of this piece of legislation. The letter thanks the committee for continued work in cooperation with the Law Center and urges members of the committee to support H.R. 328. Mr. Chairman, in addition to the reforms I have already mentioned, the bill permanently streamlines existing disposal processes by reducing administrative overhead, creating new agency incentives, requiring greater transparency and accountability from Federal agencies. The fiscal challenges facing this country are deep and severe. This will help in that process. I appreciate your leadership on this issue, Mr. Chairman, and urge the passage of this bill, and I yield back.
The gentleman yields back. The gentlelady from the District of Columbia.
Mr. Chairman, I strongly support this bill. I have a caveat, and I wonder if you could help me with it. There were 2 such bills that went to the floor last time. Both of them passed. Neither was taken up by the Senate. I believe this bill, this committee's bill, has a much better chance of passage, not just in the House but in the Senate. I was ranking member of the other committee that considered a similar bill. It was a BRAC-type bill. I sat through the hearings on both bills. The BRAC mechanism will be more controversial and will not get to the problem as quickly, and of course, it will cost a little bit of money to set up a new bureaucracy. This bill is important. First, it's a pilot bill. GSA has never done this before because most of this property is in the hands of the agencies. You, Mr. Chairman, cite 77,000, I guess it was 1,000 properties. Almost all of those properties are in the hands of the agencies, and what this bill does is give the GSA the authority when it meets an agency that says, no, we like this property, we're doing nothing with, to in fact move forward and sell the property. I like the fact that the bill pays for itself by allowing some of the funds to be used for the next disposal. This is my caveat, Mr. Chairman, and I raise it because if this bill goes on suspension, I'd have no other opportunity to do so. A strength, and mind you, I think this bill is much stronger, but a strength of the other bill was that it allows for some of the funds to be used for consolidation of employees into existing property that simply should not be sold. For example, you may have a property right next to another property or very near another property. In that case, it would be important, given the amount of leasing that the Federal Government does now. In fact, we now lease. Was a time when it was pretty even. Federal Government has tipped over several years ago and leases more property than it owns. While there might not be a great deal of such property, I would hope to work with you so that there would be some opportunity for the Federal Government for those properties to consolidate employees into already owned property, and some of the funds could be used for that kind of consolidation.
Would the gentlelady yield?
Glad to yield it, Chairman.
I absolutely agree with the gentlelady, both yourself as ranking on the subcommittee with Chairman Denham, and of course Mr. Rahal as ranking member with Mr. Schuster, need to be consulted. In the last Congress, we passed 2 bills that were not merged. It's my goal, recognizing that the Transportation Committee has both shared jurisdiction in a number of important areas and an interest, that we work together with the bill that undoubtedly will come out of the other committee to try to create a combined bill, one that would reflect the best of both. I know that the author of the bill, Mr. Chaffetz, is currently working with Mr. Denham and trying to make sure that happens. I would ask if the gentlelady would like to make sure that she is included in all those discussions.
I very much appreciate it, Mr. Chairman.
It's her time.
I'll be glad to yield to the ranking.
I just want to make sure I understand what you just said, Mr. Chairman. And so, in other words, what's the proposal with regard to going forward? I'm trying to figure out.
Right. If the
are we talking about 2 bills, or are we talking about a combined bill, or what?
The gentlelady could further yield.
Mr. Chairman, I yield in second. As I understand it, instead of having 2 bills go to the floor, and that's what we had last time, which is invitation to the Senate not to take up the bill, not that they're anxious to take up our bills in any case, we'd have 1 bill, and the 2 committees would agree on that bill.
That is my goal, and I've spoken to the Chairman, Mr. Schuster, and for the ranking member, who also serves, of course, on transportation, recognizing that this bill falls squarely within our jurisdiction. The other bill falls within the jurisdiction of the other committee. That's an unusual thing for us. Most of the time we deal with all of government, but in the case of this we have shared jurisdiction, just as we do with our postal versus our workers' comp reform. So in this case, it's my intention to pass this bill, make it the best bill we can, but then recognize either through a manager's amendment to incorporate the best ideas of transportation's bill, or vice versa, to try to have a single bill that both of our leaderships would agree is the one that we want the Senate to take up and pass.
The only reason I ask is because I really think that Ms. Norton raises a very, very important point, because I know, like in Maryland, I think we would find that to be something that would be extremely important, and I just wanted to make sure that we were going to be in a position where we actually had a very good chance of making sure that we were able to do what she just said about the consolidation.
And I share with the gentlelady that we want to get people out of leased property into owned property if whenever possible and appropriate.
Thank you.
Thank you. We now recognize another gentleman. We really do have a lot of folks that are on both. We recognize the chairman of the Full Transportation Committee, Emeritus, for his statement.
Emeritus. Okay, thank you. First of all, let me say that I'll support Mr. Chairman and Mr. Chaffetz this bill moving forward. But let me tell you, it's nice to be Chairman Emeritus because you get to look at some of what you've been working on. First of all, this bill needs to be rewritten. This bill provides for a demo. A demo, folks, is just pinking shears around the edges of a huge problem. We need something permanent. This does not answer it. It rotates, I guess, 15 properties. The Chairman just said there's 77,000 properties, so this is not the answer. Also, the means of disposal, public auction. I've had some time also to look at that. That's not the only way we need to go to get a maximum return for the public, and I'll have more details on another model I've found we've used to dispose of real estate that actually works. A couple of other points. Ms. Norton is right. The BRAC bill I helped craft with Mr. Denham, and I think you worked on it too in the other committee. The BRAC bill is not the answer. First, BRAC is very controversial, even by its construct and also by its function. And that sets up a commission, and it does it in another manner which we don't need to proceed. I think we have a better disposal method and something that's proven effective. I went back to look at this, and there's some other mechanisms that were used, and we have a proven track record for it, I think, that will be much more attractive. Secondly, this goes to OMB and GSA to collect some inventory. That's not going to answer the problem either. We've got to have each agency participating in some mandatory reporting. As we've seen from this report and when we did the hearing a few weeks ago, garbage in, garbage out. They did reports on property they viewed as in great condition, and we showed pictures of them, and they were dumps. They were derelict. So we need to recraft both of these pieces of legislation. This might be the vehicle that we could use, so I recommend we pass it. Finally, throwing a bone to the McKinney Act. The McKinney Act shouldn't even be part of this, but we can talk about that later, and if you have to throw that in to satisfy the dogs that want that, maybe we'll have to do it. But we can craft legislation. We can use this as the shell. Look forward to working with everyone and discussing this. Maybe we'll have a little workshop meeting on it.
I thank the gentleman from Florida. We now recognize the gentleman from Virginia.
Thank you, Mr. Chairman. I just wanted to add my voice of support for this legislation. Thank Mr. Chaffetz and yourself for your leadership and the ranking member. I actually appreciate the fact that we're doing this on a pilot basis because I think we can learn from that and improve the process as we move toward a more permanent piece of legislation, as Mr. Mica suggests. Just 2 points to keep in mind. One is, as Mr. Mica just pointed out, in the hearing this committee had just a few weeks ago in the Government Ops Subcommittee, what's striking was GSA has a master list. It knows what it has. But not every agency is as diligent, and it is remarkable how much we don't know about the property, in fact, the Federal Government owns. So I do think we have work to do there. And the second point is one I've made before in this committee, which is as we move forward, we need to be cognizant of the impact of the disposal of Federal property on local governments. It can be a force for tremendous good and lots of positive economic externalities. It can, however, also be unintentionally something that limits growth and contravenes local planning process. So we want to be sensitive to that, and we want to try to work collaboratively with local governments as we move forward in this legislation. Again, I thank my colleagues for their leadership, and I look forward to supporting the bill.
I thank the gentleman. The gentleman from Tennessee, Mr. Dunn.
Thank you, Mr. Chairman, and I commend you and Mr. Chavitz on this legislation. I've been interested in this for several years after learning in 2007 that the OMB had identified at that time property worth $18 billion that it did not, that the government did not need, and the Department of the Interior had identified 3 million acres of land that they would like to dispose of at that time. So in 2008, I introduced, along with Representative Dennis Moore, a member from the other side, the Federal Real Property Disposal Enhancement Act, and it was passed unanimously out of this committee, and it passed unanimously in the House. And it actually went a little bit further than this legislation now, but we need to make it easier and simpler and more cost-effective to dispose of these buildings and this land wherever we possibly can. This bill is a good start, and we need to move quickly on this. It not only will save money for the taxpayers, as has been pointed out, but it even could generate some additional funds for some of these agencies. So I certainly strongly support this legislation. Thank you.
Gentleman yields back. Seeing no other members, are there any amendments? There are no amendments. There are no further discussion. I move that the Committee on Oversight and Government Reform report H.R. 328 to the House with the recommendation that the bill do pass. The question is on favorably reporting H.R. 328 to the House. All those in favor signify by saying aye. Aye. Those opposed, no. In the opinion of the Chair, the ayes have it. The ayes have it. The motion is agreed. H.R. 328, the Excess Federal Building and Property Disposal Act of 2013, is ordered reported to the House. The Chair will announce that we are going to do the next bill and then take a 10-minute break, so I keep everyone's attention. The quicker we get through the H.R. 1163, the Federal Information Security Act, the quicker everyone will get a 10-minute break. The committee will now consider H.R. 1163, the Federal Information Security Amendments Act of 2013. The clerk will designate the bill.
H.R. 1163, a bill to amend Chapter 35 of Title 44 United States Code to revise requirements relating to Federal information security.
Without objection, H.R. 1163 will be considered as read and open for amendments at any point. The text has already been distributed and is in each of your folders. I now recognize myself for a short opening statement. Cybersecurity threats represent one of the most serious national security threats. Public safety and economic challenges are confronting all of us and our nation. Having said that, there is a balancing act, an act between stopping the terrorist, organized crime, and other groups, while at the same time protecting individual liberties and privacy. Unfortunately, it appears that these types of threats remain and will continue to be a threat for years to come. To that end, we will consistently and continuously need to address cybersecurity. This year, we are making small but important changes that, in fact, a decade ago were never considered. The Federal Information Security Management Act, or FISMA, has become largely a compliance activity. In other words, a check the box, not a bring about real security. Getting to the protocols that were especially needed, the GAO recently found that security incidents among the 24 key agencies had increased more than, important number, 650% just during the last 5 years. In April 2012, the House unanimously approved a bipartisan bill to update FISMA statute, and I have introduced with the ranking member, that I had introduced with the ranking member, Mr. Cummings. As you can imagine, often what happened in the last Congress, a number of bills went to the Senate and did not pass. So last week we reintroduced the bill, H.R. 1163, the Federal Information Security Amendments Act of 2013. The Chair and the ranking member again have found ways within our portion of the jurisdiction to ensure that we are updating this Act in a way that balances the need for security and individual privacy and rights. And with that, as we continue to work on this, I'd like to ask the rest of my statement to be placed in the record and recognize Mr. Cummings for his opening statement.
Thank you very much, Mr. Chairman. In testimony before the Senate Select Committee on Intelligence last week, the Director of National Intelligence, James Clapper, placed cyber attacks at the top of his list of national security threats. H.R. 1163, the Federal Information Security Amendments of 2012, is bipartisan legislation intended to ensure that Federal agencies use a risk-based approach to defend against cyber attacks and protect government information to prevent it from being compromised. I want to thank Chairman Issa for continuing this bipartisan effort that started in the last Congress. The bill would make key changes to help protect our Federal information systems from cyber attacks. Specifically, the bill would shift the Federal Government to a system of continuous monitoring of information systems, streamline reporting requirements, and ensure that agencies take a smart, risk-based approach to securing networks. This bill would continue to authorize the Office of Management and Budget to set Federal policy for information security. This is important because we need to hold all agencies accountable for developing appropriate standards and living up to them. However, nothing in this bill would prevent the Department of Homeland Security from continuing the great work that it is doing to protect our nation against potential cyber attacks. Not only has the Department dramatically expanded its cybersecurity workforce, it has also built National Cybersecurity and Communications Integration Center to serve as the Federal Government's Cybersecurity Command Center. As I stated last year, nothing in this bill is intended to impinge on the privacy of everyday Americans. We must be sure that personally identifiable information is appropriately protected and shared with the government only when necessary. We also must be sure that information shared with the government can be protected when appropriate without compromising our open government laws. Mr. Chairman, I look forward to working with you to move this bill quickly to the floor. I hope that this non-controversial legislation can again be approved as a standalone bill under suspension of the rules, just as it was last year. Thank you again for working so closely with me and my staff. The legislation has been a truly bipartisan effort from the very beginning, and the final product is all the better for it. With that, I yield back.
I thank the gentleman. I thank him for his kind comments. I'll leave the record open until the end of the day for any members who wish to submit a written statement. Does any member wish to speak on the bill? The gentleman from Virginia is recognized to strike the last word.
I move to strike the last word, Mr. Chairman.
The gentleman is recognized for 5 minutes.
Mr. Chairman, I want to thank you and Mr. Cummings for your leadership in this very important legislation. And I know I'm delighted to join with Mr. Mica as an original co-sponsor. You put your finger on it, Mr. Chairman, that in the past, this has been sort of a compliance-based, check-the-box approach to an issue that can no longer be managed that way within the Federal Government. In 2006, there were 5,503 cyber incidents reported to the U.S. Computer Emergency Readiness Team. Last year, there were 48,000. And by the way, over a 6-year period, it's even worse than you described, Mr. Chairman. With the new high-risk report this committee received, that's 782% over a 6-year period. And we know from the headlines they're getting more and more serious. They are a threat to national security. They are a threat to the functioning of a modern economy. As we speak, there are cyber security attacks going on in South Korea, for example. And so we must do something about this. This legislation is designed to try to get more proactive within the Federal Government about meeting this threat. I look forward to working with you and Mr. Cummings and Mr. Mica in trying to make sure that we have aggressive oversight by this committee on implementation and new meet-the-risk strategies coming out of the Federal agencies. And again, I thank you for your leadership in this very important issue.
I thank the gentleman. The gentleman yields back. We now recognize the chairman of the Subcommittee on National Security, Mr. Chaffetz, for 5 minutes.
Thank you, Mr. Chairman. As you know, everything from a guy in a van down by the river to nation states are engaged in the cyber attacks upon this country. It is imperative that we not only, as individuals at home, take care of the cleanliness of the apparatuses that we use, but that the Federal Government make some significant changes and improvements into dealing with this issue. As you noted, it's no longer just simply check the box anymore. Business as usual is not going to provide the type of security that we need in dealing with this very, very difficult situation. The GAO recently found that security incidents among 24 key agencies had increased by more than 650% in just the past 5 years. Technology is great as long as it works, but we have to do some things to bring and drag the Federal Government up to the latest standards. This goes and it helps in that regard. I appreciate your leadership on it. I look forward to working with you and others on this most important issue, and I encourage the passage of this bill. Yield back.
The gentleman yields back. Are there any amendments? If there is no further discussion, I move the Committee on Oversight and Government Reform report H.R. 1163 to the House with the recommendation that the bill do pass. The question is on favorably reporting H.R. 1162 to the House. All those in favor signify by saying aye. Aye. Those opposed, no. In the opinion of the Chair, the ayes have it. The ayes have it. The motion is agreed to. H.R. 1163, the Federal Information Security Amendments Act of 2003, is ordered, reported to the House. And with that, we're going to take basically, we'll reconvene at 12:15. Make sure I'm on my watch. Yes, approximately 10 minutes. So it'll be brief, but I think everyone needs a short break. We stand in recess.